Hey everyone, welcome back to Corporate Decoder, the place where we decode the secrets behind company filings. And boy, do we have a surprise coming up for you today, because this filing is like a puzzle with a few missing pieces that we need to put together. So we're diving into a recent report from Sono Group NV. Now usually we spend a lot of time digging into the nitty-gritty financials, but today Sono dropped a presentation that's more about what's next and the road ahead. They met with investors on July 17th, and this report is basically a heads up about that meeting. They're talking about how things are looking in the second half of 2025 with their market traction and how many orders they expect. Think of it as a company giving you a peek behind the curtain to share their latest plans and expectations. It's not a deep dive into past earnings, but more about future aspirations and how they plan to get there. This report is dated July 17, 2025, which is the day they had this investor presentation. It's a current report form 8K, which usually means something significant happened or is being disclosed. In this case, it's about that investor meeting. The company we're looking at is Sono Group NV, and they're based in the Netherlands. If you're wondering about their US presence, you might see a Munich, Germany address for their principal executive officers. It's a bit of a global operation. Now, here's something interesting Sono Group NV is marking themselves as an emerging growth company. This is a designation for companies that have gone public more recently, and it allows them to follow some different rules and have some flexibility with reporting. It means they're still in a growth phase, and the SEC gives them a bit of a lighter touch on certain regulations compared to very established huge companies. The main reason for this filing is really about something called Regulation FD disclosure. Think of Regulation FD as the rule that says companies have to share important information with everyone at the same time. They can't give a little tidbit to one investor and not the others. So by filing this report, they're making sure that the information they shared in their investor presentation on July 17th is now publicly available and accessible to everyone. It's all about fairness. So on July 17th, they gave this investor presentation at an emerging growth conference. The presentation itself is attached to this report as Exhibit 99.1, and it's available on their investor relations website. They mentioned that this presentation will be used from time to time when they meet with investors, analysts, and other important folks. The big topics in this presentation are updates on their market traction, which basically means how well their products or services are being received and adopted by the market, and their expected order volume for the second half of 2025. Now, here's a standard but important disclaimer. The company says they don't have a duty to update this report or the information in it. They might do it if they feel it's necessary, but they aren't promising to. So what you read today is what they're putting out there for this specific moment. This is where things get really interesting, and also where you need to exercise some caution. The report is full of what they call forward-looking statements. These are statements about the future things they expect or plan to happen. They use words like expect, anticipate, intend, plan, estimate, and forecast. These are essentially predictions and guesses about what's going to happen down the road. The company freely admits that these future predictions are based on their current expectations and beliefs. And this is a big but, these predictions are subject to a whole lot of risks and uncertainties. And these risks could mean that the actual results are very different from what they are predicting. It's like saying, I think it will rain tomorrow, but there are a lot of things that could stop it from raining. They lay out some of these risks specifically. Their ability to get listed on major stock exchanges like NASDAQ or NWAS is a big one. They also talk about closing deals with a company called Yorkville and how those transactions might play out. Maintaining enough cash to keep the lights on and meeting the requirements to stay listed on stock exchanges are also key concerns. A major part of their strategy is shifting to retrofitting and integrating solar technology onto other companies' vehicles. That's a big change, and a lot can go wrong there. Can they get more money beyond what they have now? And can they keep good relationships with the people they owe money to, the people they buy from, the people who buy from them, and their own employees? It all hinges on these things. They point us to their annual report for even more risks and uncertainties. Basically, they are saying there's a lot that could go wrong. Remember, these forward-looking statements are only as good as of the date of this report, July 17th, 2025. They aren't promising to update them if things change unless the law says they have to. This part is pretty straightforward. It lists the exhibits that come with this report. The most important exhibit here is Exhibit 99.1, which is the investor presentation itself. This is where all the details about market traction and expected orders are found. Then there's Exhibit 104, which is the cover page data in an interactive format. Think of it as machine-readable data attached to the filing. And finally, we have the signature. George O'Leary, who is a managing director, has signed off on this report. The date of signing is July 18th, 2025. So what's the big story here? Sono Group NV is sharing optimism about the second half of 2025, focusing on their business strategy and potential orders. They're an emerging growth company, so they're expected to be in a growth phase. However, they're upfront about the many risks involved in achieving their plans, especially with their shift in business focus. They're not shy about saying things could go very differently than planned. In my opinion, Sono Group NV is in a bit of a transition phase, clearly aiming to signal a positive future outlook to investors through their presentation. The company is acknowledging the challenges it faces in achieving its goals, which is a responsible move. It's important for investors to look past the positive spin on market traction and expected orders and really focus on the extensive list of risks they've outlined. Their ability to successfully transition to retrofitting and integrating solar technology onto third-party vehicles is crucial, and the success of their financing arrangements with entities like Yorkville will be absolutely key to their survival and growth. If they can navigate these hurdles, they might achieve their forward-looking targets. But the road ahead is definitely not smooth. Alright, that's our breakdown of Sono Group's latest filing. What's your take on these numbers and what they signal for the company's future? Drop your thoughts in the comments. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives. Don't forget to check out the Discord in the description. Thanks for watching. See you next time.